These financial deadlines hit on December 31st, and missing them could cost you thousands. Here's your complete year-end checklist with exactly when to do each item. By December 15th, you're going to review your 401k contributions, if not earlier, check your year-to-date total, and calculate the gap in order to get the full employer match. Submit increase requests to HR for contributions to these plans, and confirm any changes that need to be processed before year end, because often there's a couple week lead time. Schedule year-end medical appointments. Yeah, doctor physicals, dental cleanings or procedures, eye exams, any procedures you've been postponing. Tuck them into this year. You've likely already hit your deductible. Review your FSA balance. Log in and check the amount remaining. Plan your purchases to use those funds or lose them. Order online items, which you need to factor in the shipping time because they have to be put in use before December 31st. Research your charitable deductions and donations. Decide which charities to support this year. It could be changing. You're going to calculate your donation amounts and determine if you're going to file an itemized or standard deduction, because that's going to cause you to either smush contributions together in one taxable year or it doesn't matter. You're going to initiate stock transfers if donating appreciated stock fits into your plans, especially for donations to charity. And you're going to get the charity information in order to accept those transfers, generally trustee to trustee. That helps you reduce your required minimum distribution, FYI. By December 20th, you're going to use tax loss harvesting. You're going to look through your portfolio, review the taxable investment accounts you have, and identify positions that are showing losses. Sell those losing positions, document it for tax purposes. And then you're going to plan what to repurchase and when. You must surpass the 30-day wash sale rule to buy back the same security. So if you had Amazon stock and you're selling it at a loss, for example, then you have to wait a full 31 days to buy Amazon back. But if you're selling that stock and buying a different online marketer, you could purchase it right away. And take a final sweep through your FSA account. Yeah. Make your in-store purchases of eligible items. And almost all of these entities, CVS, Walmart, etc., have like whole items that are just called FSA specific, FSA eligible. Fill all the possible prescriptions that you're now on, buy your glasses, contacts, eligible supplies, pay outstanding medical bills. Maybe there's something that's been hanging fire and you want to pay it, even if you have to pay it with a credit card. IRA contributions, if you're doing that, I'd like to have you do your IRA contributions January 1 of every year. But if you haven't gotten to it, you want to go ahead and do that. And you're going to decide between traditional or Roth. Now, you do have until April 15th to make your contribution, but why not get the money in there and working sooner? You're going to calculate the contribution amount into which you're going to place monies, the Roth or the traditional. And you're going to initiate the transfer from your bank or your credit union to that investment account. And you're going to confirm with the company that they've actually received the contribution and designated it as a 2025 contribution. Then charitable deductions. You're going to make either cash donations, complete stock transfers, particularly of, well, only of appreciated assets, and you're going to get receipts for all the donations that you've made. You have to organize it for tax purposes, and if it's over $500, you have to get it on the charity's letterhead. By December 27th, required minimum distribution, that has to be in, probably even before that. If you're 73 and above, you've got to confirm with the trustee that's holding your qualified plans that they have actually distributed the monies. You're going to request the distribution for sure, like overnight mail, if it's not done in a timely fashion. And you're going to check all of your retirement accounts because you have to take the sum total of all of them. You don't have to take it pro rata from each of the accounts, but you do have to take it for the sum total of your retirement accounts. Roth, traditional, no, yeah, Roth, traditional, not Roth, pardon me, traditional, 401k, 403b, all of that, SEP IRA, all that. Then we want to talk about final FSA purchases. Yeah, last minute eligible expenses, use every remaining dollar. Some plans have an extension past 12/31. Don't count on that. And submit any reimbursement requests right away. You're going to keep receipts throughout the year so that this isn't an onerous process at the end of the year. And finally, you're going to do your 401k check one more time. You're going to confirm that your final payroll deductions are processed, verify your total contributions to the plan, and just double check that your employer match has been received at least by year end. You save that year end statement for your own records and for taxes. And then let's talk about business expense payments, right? If you're self-employed or have a side hustle, you're going to pay deductible business expenses, probably bunch them into one taxable year if in fact you vacillate between itemized deduction and standard deduction each and every year. And you can change each and every year. You're not locked in. So you might want to make some very large equipment purchases right now between now and year end. If you use your car exclusively for work or, majority of the time for work, you may want to update your car between now and year end, particularly a lease. You might want to pay your fourth quarter estimated taxes, right? Or your first quarter estimated taxes, even for January. And you're going to document certainly everything you're doing. By December 31st, boom, investment rebalancing. You're going to review your current asset allocation, compare that to your target allocation. It will never be exact. And so there's going to be some variance. And if it's incidental, forget it. It's not going to phase you from market standpoint, asset allocation derivation or deviation, excuse me, relative to the trading costs that you might incur, and maybe well, trading costs are mainly the obstacle to doing that. And now let's talk about gift tax considerations, right? We're going to make our annual exclusion gifts 18,000 per person. It's actually 19,000 this year. You're going to transfer funds or assets that are appropriate to someone else. It doesn't have to be a relative, it could be anyone. You're going to document these gifts, and then you're going to consider estate planning overarching, right? Implement these annual gifts into perhaps larger gifts if you're looking to distribute the wealth to different generations. And you're going to do some final tax planning. Yeah. Review your estimated tax payments made. There are penalties if you don't make them on a timely basis. Calculate if you need to pay more in estimated taxes if you're unestimated, and make the final estimated payment if you're required. You're going to gather all your tax documents, so you're not doing that in January and February. And then you're going to look at your insurances. Now, this is something that so few people do on a systematic basis, and it's really important. You're going to confirm that you still have adequate coverage on your life, on your disability, on your home, on your car, and your liability. Yeah, and it's no small matter, and I want you to look at all of those areas. Then you're going to review your beneficiaries, because if you married or divorced or someone died in the year and they're still listed on your beneficiary change form, on your beneficiary form on file with the company, insurance, annuities, 401k, 403b, you're going to review that and you're going to change it. If a new child was born, grandchild, depending, you're going to change those beneficiaries. And you're going to document those updates. Yes, you are. Then we're moving into January 1st through 15th. You're going to organize your finances, right? You're going to create your 2026 budget, and that's going to be steered by your 2025 budget and what you found as deviations from it. Did you overspend in this category and underspend it in another category? So you just tweak it so that it's really aligned and you don't feel like a loser because you went over in this category, because over here you went under. So you're not a loser. It's not routed correctly. It's not tracked correctly. And I want us to track things, and I want us to feel like winners. I want us to have things aligned with our goals and objectives. And I want us to be in a very, very good mind and heart space about those achievements and those accomplishments, because it is intention at work. And I commend you. You're going to organize your tax documents, review and update your passwords. Make sure that your passwords are able to be discovered by someone in the event of your untimely death. It's very gnarly to go through accounts without passwords. Very gnarly. And then contribution planning. You're going to set your 2026 retirement contribution amounts up right now, and then elect your FSA amount for 2026. This is all in January. Plan your IRA contributions, whether it's Roth or traditional, and then create a funding schedule for your insurance policies. It's better to pay them annually. You don't have to pay credit charges to them. You're going to review your health insurance choices. You're going to update your life insurance if needed. If you had another kid, another baby, for example, yeah, your income loss would be substantial to your survivors. So bump up your life insurance. It can be as easy as telling the payroll person, okay, kick up my life insurance double or whatever it would be. It's very, very inexpensive. And you're going to check your auto and homeowners policies and your liability coverage. Yes, you will. Because as I'm wont to say, one lawsuit can ruin your entire morning. So you want to confirm that you have adequate coverage. And then you're going to consolidate any bills, set up automatic payments. You never want to be late because that dings your FICO score. So set everything up on payments automatically as much as you can. We're busy. Who wants to do this by hand? And consolidate your accounts if it might be helpful. I would caution you, however, against canceling a credit card because that takes away the full amount that you would otherwise have that factors favorably into your FICO score if you simply cancel the card. Just put it in a desk and don't use it. But you still have that outstanding line of credit that can be an asset to you. Caution, caution, caution. You have deadline exceptions for the contributions to your Roth IRA and your traditional IRA. Your contributions do not need to be made until April 15th, 2026 for the year 2025. Your HSA contributions can also be made for 2025 up and through April 15th. And you're going to file your tax return. You're going to make your estimated tax payments Q1 of 2026. And don't wait if you can act now. The cost of missing deadlines is really, really onerous. In a 401k, if you miss putting $2,000 in, it's $2,000 to $5,000 in a lost match, for example. And the tax benefits of the FSA, if you just lose $300 to $500 disappears. That's like, who wants to do that? And then if we don't tax lost harvest, we could lose $500 to $2,000 in tax deductions and or pay unnecessary taxes. And if you don't take your required minimum distribution in the amount that is otherwise owed you, you have to pay a 25% penalty on the amount that you didn't withdraw. Then you have to withdraw it and you have to pay the tax on it anyway. So the charitable timing, if you don't smush your deductions into one year or the other, this year, 2025, or next year, then you fall prey to perhaps not meeting the threshold for itemized deductions, which could bring you more of a tax benefit than standard. So you can choose back and forth every single year, depending. And this is the very time of year you're going to look at that. And then the potential cost of all of these omissions, if you will. I mean, 5 to 10,000, easy, easy. So be intentional. Be intentional. This is your life. This is your money. This is your joy. This is your happiness. This is your stress level or lack of stress level. So print out a checklist. Review your 401k by December 15th. Schedule your medical by December 15th. Check your FSA by December 15th. Tax loss harvest by December 20th. Empty the FSA by December 27th. Take your RMD certainly by December 31st. You can't call up your broker and ask for it on December 31st. You cannot. It's not going to happen. Charitable gifts, you make them by December 31st. You rebalance your investments by December 31st. And check off all these items as you complete them. I'm Deborah Morrison. Which deadline might you be worried about missing? Share your year-end financial to-do list below, and let's hold each other accountable to finish strong.